But right now, we've got some amazing speakers. We've got an incredible panel that's coming on. Make sure you connect with everybody. As always, find them on LinkedIn. Make sure that you connect with them later on if you haven't had a chance to ask your questions. For many people, it's kind of shy. You don't want to put your hand up and ask a question because you go really quiet. What is it? I don't want to talk. People are looking at me. So make sure you connect with them and do the WhatsApp thing after that. Our next panel is going to be talking about the future of... Pardon me, that wasn't me. It wasn't. I know if it was. The future of crypto adoption and strategies for mainstreaming digital assets. Our moderator for that is a genius, and she's going to be looking after everybody on stage. She's the editor-in-chief for Cointelegraph. Please put your hands together for Kristina Lucrezia Cornèr.
Thank you very much.
I'll just get my jet. It's just passing over.
Thank you so much. Do we have another seat here for the speakers? I can be there, I guess. Guys, let's come up on the stage. Badr, Stefan, Caroline, Amar. First tip of the great leader is sweep the sheds. Or put the chairs on the stage. Thank you so much. I'm honored to be here today talking about a very important topic of crypto adoption. And as an introductory question, I would love to ask every one of you, what is your commitment to crypto and blockchain adoption through your role, through your company, through your daily activity? Let's start maybe from the right side. Stefan, please.
Well, thank you very much, Kristina. So my name is Stefan Kimmel. I'm the CEO of M2. We are a brand new exchange and crypto investment platform based here in the UAE, out of Abu Dhabi. Our key goal is, of course, to offer fully regulated, secure and transparent services to our investors, both on the exchange side, so trading, buying, selling of crypto, as well as on earning high yields, high returns on BTC and ETH in a secure and regulated environment, in a nutshell.
Thank you so much. Caroline.
Thank you. So, Caroline Malcolm, I'm the VP of Public Policy at Chainalysis. Chainalysis, as you probably know, is a blockchain analytics platform. I guess we really work on sort of crypto across a number of different ways. First and foremost, it's about understanding the ecosystem through the data. And then kind of going deeper into that, on one hand, it's really helping firms that are looking to build in this space, grow in this space, and helping them understand their market, but also helping them really foundationally with this issue of compliance, initially, of course, with things like AML, sanctions compliance, and so forth, but also in turn into some of the broader regulatory requirements that we're starting to see, like we see here in Dubai, set by VARA, and also ADGM and other regulators in the region. And then, of course, we also work with those regulators to help them understand the market and understand what the firms in the market are actually doing, and also think about things like benchmarking and you know, what normal or what good looks like in this space. And that's very much kind of an evolving journey because this space is still relatively new and this question of supervision is still a very, very new one. So we can dive in a bit more.
Excited. Thank you very much. Badr.
Hi everyone, my name is Badr Kalooti. I'm the head of growth and operations for Binance across MENA and Africa. Pleasure to be here today. So at Binance, obviously we're the largest exchange in the world, and so it's on our shoulder here to kind of drive the adoption of the industry and understand the nuances to really deliver the benefits of Web3 on a global scale. So if you look at the status quo today of Web3, we're about 400 million users. That's roughly about 5% penetration on a global level. And so what we're trying to focus to improve that adoption level is to first and foremost focus on education, because people need to understand what this technology is about, why it's important to them, and then how to use it. And then we also look at different ways to abstract the complexity of entering into Web3 world. And so we make sure that, in my opinion, adopt a very seamless and easy way to get people to have wallets and to onboard with different use cases, because essentially the wallet is your gateway into Web3. And then lastly, we look at promoting all the various use cases that can drive mass adoption into the space so that we can achieve the objective of bringing Web3 to the masses.
Thank you very much. Last but not least, I had a pleasure to moderate a panel yesterday on regulations with your colleague. So Amar, please introduce yourself.
Thank you very much. Yeah, hi everyone. My name is Amar. I'm a legal director at DLA Piper. I think my main contribution to the space so far has been advising VARA. I've had a genuine pleasure of working with them for the last year and a half in developing their regulatory framework, which launched at the start of the year. So we continue to work with them.
Thank you very much. So let's delve into this mainstream adoption concept that we've been talking for so long in the blockchain space. What does the mainstream adoption represent to you? Does it relate to a killer app? If yes, what is, in your opinion, the killer app for the blockchain sphere? Yeah, whoever wants to start, Badr. Okay.
I'll happy to jump in.
Yeah, you go ahead first.
All right. Thank you, Stefan. So first, it's important to understand there's varying degrees of adoption depending on where you are in the world, right? Developing countries tend to have a higher adoption rate, but obviously we're off the peaks recently, and the growth rate hasn't necessarily recovered as much, or it's been kind of stagnant. What we are seeing is higher growth and stronger recovery in developing markets, because the compelling proposition of crypto resonates well in those markets, be it because of inflation, devaluation of currency, remittances, lack of banking infrastructure. I mean, today, 24% of people remain unbanked. So those markets have a higher affinity towards adopting crypto, and that's where we're seeing the most growth here today. In my view, you have to be patient. Those killer apps like Instagram and YouTube, what they did for YouTube, for Web 2, will eventually come. It's just, if you look at what happened today, you had two, I think, successful use cases that drove traction. One was Bitcoin being perceived as a new store of value, right? That, in my opinion, shares a lot of characteristics with gold. It's more transportable, though. It does it better. You can store it on your phone and send it through your phone. It's more divisible and it's more scarce. And so today, you see a lot of people entering the Web3 space via buying Bitcoin. And today, I think it's just around, 0.07% as in global asset class. So there's tremendous room for growth there. The second use case, which got the most traction, in my view, is the transfer of value. So Bitcoin was store of value. Now with stable coins, you have the ability to transfer value in a more seamless way. And you've seen, for example, it's essentially a digital proxy to the US dollar. And very interestingly enough, last year, stable coins settled as much as Visa did in terms of dollar amount, around 11 trillion, and they've only been around for about 3 to 4 years. So that's showing you where the next wave of adoption can come from as well. And then you obviously have all the decentralized applications that are being built on like the Ethereum, L1s, L2s, whether it's DeFi, NFTs, tokenization of real assets that will bring people on chain.
Yeah, fully agree with what you're saying. I think on top of that, we have to be mindful that so far, a big part of what crypto was or has been in the recent years is still dominated by retail and by speculative purposes. There's a lot of speculation, get rich fast, get your Lamborghini, etc., etc. I think for that to really penetrate much bigger pockets of the market, a much bigger share of international capital markets, really have to make sure the foundation is there for that mass adoption. I don't think it's a single killer app. I think it's more broadly things like, obviously, regulation. We're seeing a lot of movements in Europe. Here, UAE is an absolute global leader in the space. We see it in Hong Kong and Singapore and in other markets. And with the presence of strong regulation, clear rules, and clear pathways, we will see a lot more institutional investments. So we see BlackRock, JP Morgan, pension funds, all the big US money floating into crypto now. That is 1,000 times bigger than anything we've seen so far. So the whole institutional side is a complete game changer in my mind, and that requires regulation more than anything else. On the retail side, I'm fully with you. It's some of the use cases, but it's also more convenience. People just, the majority of people doesn't want to enter 24 word passcodes into their MetaMask wallet. They want to transfer money, talking about used stable coins. They want to transfer that out of their social media apps or more simply from their phone without the complexity and the risk of losing their passphrase, things like that. So that to me is really so convenience and compliance are the two major triggers for mass adoption.
Very clear, thank you very much. Do you agree that regulation is a door opener for the mainstream adoption?
Yeah, it's very interesting, and I think some of the things that have been mentioned are sort of borne out by the data, and you may know Chainalysis delivers every year this Geographies of Crypto Adoption report, which really looks at the retail market. And I think what's quite interesting is when you look at those top 10, top 15 countries in the world, you are seeing a lot of emerging economies in those countries. But also to Stefan's point, that in terms of game changer, in terms of sheer volume that you see of institutional, is that really occurs once you have the regulatory pieces in place. What we see consistently is that those top 10, 15 countries don't necessarily have a regulatory framework. So when it comes to retail adoption, regulation is sort of not a necessary precursor. But to get to the sort of level of institutional adoption, institutional access, regulation is absolutely necessary. And for some of the more mature markets, having that regulation in place, more advanced economies, it allows also a greater breadth of the retail market in as well. And I think that's something which I think we see as quite an important distinction between sort of going from where we are today to where we really need to get to take the industry to the next level.
Yeah, I would add to that as well. In terms of, I hope regulation is an enabler. In terms of what adoption looks like, to me, adoption, plain and simple, is when we stop talking about the technology. You don't go on the internet and order your goods and say, I'm going to use HTTPS. You just like, I'm going to use Amazon. So in the same way you want to buy a digital asset, I'm going to talk about NFTs, and it turns everyone off. And I think how we get there is partially regulation is one, and hopefully it facilitates it when you introduce a financial element in order to facilitate the decentralization that necessitated having oversight and regulation to eliminate bad behavior. But I also think there's, and I'm an optimist, and I think there's huge advancements that have happened since the last bull market in this area, which is the technology itself is innovating at a huge pace. And I think the last cycle, the technology wasn't there. You would have one project which would totally swarm a chain and make it almost unusable in terms of prices. And a lot has happened in that sense. So sort of by the next sort of matching of regulations being there with the technology having advanced in the ways it needed to, that's when you can then build the killer apps to the point of, as I said, not mentioning the tech anymore.
Just to add to that point, I mean, it's important to note that the innovation cycle has the same pattern. Someone will come, disrupt something, and then provide proof of concept, and then the regulator will step in afterwards and kind of cover that lag to kind of catch up to that disruptive technology. It just so happens that crypto is quite transformative in the sense it touches almost every sector, including the financial sector, which there's obviously naturally a lot of inertia and resistance there to adopt this kind of technology. So what we're seeing now is the regulators are starting to play ball. Dubai is leading the way, in my view, along with other places in the world. So we're still, I think, a couple of years away to where this space gets properly regulated. And then, as Stefan mentioned, the institutional capital is more comfortable to come in because that gap in trust is eliminated. And with institutions coming in, you grow the size of the pie and you provide a level of stability to the asset prices.
All very valid points. You've mentioned different countries, around 15, that are pushing forward this ecosystem infrastructure. You mentioned Dubai. To which extent do you think the role model of these countries and institutions locally can actually provide more collaborative efforts? And what can we as a decentralized community can do in order to make sure that we combine our efforts that take lessons and best practices and actually scale them?
Look. I mean, it's on both sides, right? It's the players in terms of developing use cases, developing technology, driving interoperability across layers, across platforms, the wallet system. It's integration of crypto players or blockchain players with Web2 and conventional players, because that is where we have to pick up a lot of the users. They're still there. If we want to bring them across, we have to make it easy for them by interacting and being interoperable with them to bring them across. And then it's what all of us do is we talk to regulators everywhere. You guys doing it a lot. I think all of us on stage doing that a lot with the regulators around the world to make sure we level that and we bring best practices from one jurisdiction to another. The regulators, of course, talk to one another. They all bring us in for consultations around the world. So driving that across all the various jurisdictions and evening the playground there is a big part of that.
I think one of the things I was struck by in what the data tells us is that you look at VARA, what's happened here in the last 12 months, for example, ADGM, VARA, there's a lot of activity on the regulatory front. And we have seen the growth in transactions through centralized exchange grow along with that. But what we've also seen, which I think is perhaps a little less expected, is that we've seen the business going through decentralized protocols as well, also growth. And that's a real distinguisher between this market and other kind of leading markets in the region. And I think a lot of that has to do, as you attract those centralized licensed businesses, you also start to grow the maturity in the ecosystem in the UAE, and there you see people going for more advanced use cases than you might see in other countries where you don't even have that kind of regulatory layer. And then I think kind of the two other things I would mention is certainly the conversations with the regulators. I'm always really struck, and I think Richard mentioned it in the earlier session, and also Dr. Marwan as well, in terms of people here are very open to that conversation, but I'm also struck how there's often a reluctance from businesses in this space to go and engage with the regulator beyond the sort of supervisory moment when they're actually applying for a license. But if you look at what traditional finance businesses do, they're in there having those conversations all of the time, building that relationship, getting an understanding of what the requirements are, beyond just that supervisory moment when you have to go in and kind of prove yourself fit for the license. So I think that's something I'd really encourage. And also because this is still very much emerging space, so this idea that there is a best practice, I think we often talk more about sort of good practice. It's still something which is emerging. Industry is learning, regulators are learning, and that really needs to be a collaborative effort, that you need to bring along some of that baseline data about where you sit comparatively to others to really kind of strengthen your case about where you sit and why they sort of should take what you're saying in your business model as something that's going to be for the ultimate good of the ecosystem and community and help grow it in a really safe way, because that's what I think regulators are mostly interested in.
Do you think that regulation will also help remove this level of skepticism that is coming from the traditional industries and from the community that is outside of the crypto space? What do you think are the recipes in order to fight this damage that has been created with the recent collapses of Moderator, FTX, Celsius? Mention me more.
Yeah, I think that's part of the journey, and they're unfortunate, but they're inevitable, right? And I think the proof is in the pudding. Dubai or the UAE has amongst the highest rate of crypto adoption in the world at 28%, and that's because all the pieces of the ecosystem are coming together nicely. Governments are pro-crypto. They see the value of this disruptive technology. It is the future, and they want to get ahead of the curve. Regulators have stepped in and figured out how to create a regulated framework in uncharted territory. This playbook did not exist before, so kudos to VARA and other regulators in the UAE for understanding how to put the proper foundation that's pro-business, but also pro-consumer safety and pro-corporate safety in terms of giving them comfort to begin to engage. Because on the demand side, we talked about it's retail and it's corporate, right? So those two elements will be a lot more comfortable engaging with crypto under a regulated framework. And then we have to also not forget the middle layer, which is the developers and the startup projects. And Dubai has done a great job of attracting top talent and blue chip names from all over the world to build, because that's at the core of the whole thing.
Have anything to add to this?
Yeah, I would add, yes, I do think regulation provides legitimacy. I think that a lot of the actions that we've seen in the space thus far are basic things that would have just not allowed to have happened under a regulatory regime in traditional finance. So if you want for that cross collaboration, there's a lot of principles that when we were creating the regulations that we drew upon, and it's just to get some of the basics right around corporate governance, around AML, around consumer protection. I mean, these aren't actually that hard things to do, but just give that legitimacy to businesses. That being said, yes, you need to do it in a way which allows for the standards to develop around the technology. You can never regulate that. You can never impose standards that people need to comply with. So there's the flexibility. But yes, absolutely, I think the legitimacy would be derived from regulation. Yeah.
I would just add, it's not just the trust. The trust is a big aspect after everything that happened over the last 2 years. But it's also a pure prerequisite. If you talk to even family offices, definitely to institutional investors, many of the conversations I'm having, the very first question before yield, before spreads, before anything else is how are you regulated? What's your custody license? What's your exchange license? How can I be sure that's fully compliant? Because all those investors are required by their own risk and compliance departments. They're not even allowed to do that unless their partner, their investment partner, is fully regulated. So for all the institutions, that's where we're talking the big money. It's a pure requisite without sine qua non, without they can't invest.
I think that's also something like regulation, governments have a role there, but also industry doesn't have to wait for the regulation. I think we've also seen industry start to mature. Events of the last 18 months have really sort of shaken people up and realized that they know they need to have trust from their consumers for the market to grow. And you're starting to see that in the maturity of the business models that we're seeing, whether it be things around, segregation of assets, vertical integration of different parts of the business, for example, start to have more awareness of conflicts of interest and intersections between different parts of the ecosystem. Even on things like cybersecurity, we're seeing kind of a push for more kind of cyber hygiene in some of the DeFi protocols where we've seen a lot of hacks, where you see things like the REC test being proposed by industry. So I think that, yes, regulation is part of it, but industry can also do a lot to help itself and has already started to move in that direction.
Let's imagine the scale of crypto adoption is developing really very fast. And, every 10th person, has a crypto wallet. We have regulations in place, either proactive or reactive. What are the additional challenges and risks that can come with this fast crypto adoption? And what are the strategies, in your opinion, to handle them? Amar?
Yeah, happy to take that. I think, what are the risks? I think some of the risks are well known, well publicized. As I said, part of the status of the technology facilitates new threats, which we haven't sort of adapted to yet, and we know sort of hacks and everything are still prevalent in this space, and people make mistakes. Anyone who's interacted with a ledger, I certainly have made mistakes in sending transactions. It's not easy. So how is that solved? I think it's solved at protocol layers, the layers built on top of the protocols, and then ultimately the UX and having consumers with interfaces that they're familiar with from the last digitization cycle that happened actually not even that long ago. I think also a risk, this is not to be too negative, but I mean the technology is moving at such a pace, I can't imagine my parents in their lifetime integrating with crypto or digital assets. So I think the solutions and intermediated solutions, I know we're in a decentralized, disintermediated space, but you need decent intermediated solutions so that all populations across the world are aging, so that there aren't these huge percentages of populations that are getting left behind.
I'm really glad that you mentioned this. So yes, how would you also support the inclusivity in the space when it is scaling? You want to add maybe something on this? Not only, I think, in terms of age, but in terms of different communities, because whatever is developing pretty fast, we need to make sure that nobody is left behind.
Yeah, I think that's the inherent mission of Web3, right? It's democratizing ownership. Web 1, Web 2, democratize information. It was read and then read, write. Web 3 says it's read, write, and own. And so the value accrues to the participant. And that's one of the reasons why I'm personally very bullish is because if you eliminate one of the risks, which Amar talked about, the adoption risk, and I think it's pretty much self-inflicted because we designed it in a way where it's very kind of esoteric, so only a few types of people related to it, and you have to make it more mainstream. People are going to flock towards this technology because I think it leapfrogs a lot of the legacy issues of the previous ways of doing things, right? So I think I'm confident that adoption risk is at the bottom of the list here. I think the short term, it's market cycle and liquidity cycle risk, which hopefully will sort itself out in a couple of years. It's then on the technology risk. So can blockchain scale in a very effective way where it's not too expensive, enough block spaces out there to execute transactions in an economical way? And then it's operational risk, right? Can you secure these blockchains? Can you prevent fraud, hackers? And that comes with better computing power and with education and awareness for the user.
So what would be your outlook, let's say, in the next 5 years? What is your ideal scenario for the adoption? And what is your reality scenario for the next 5 years? Let's start with you, Stefan.
The self-destruct. Do we still have time, or was it the end?
Yeah, I think so.
Yeah. Look, I mean, the 30
5
second.
minutes according to Mike.
Okay. We got 2 minutes, I see. So 30-second answer is look, it's exactly what we were describing. It's more of the same. Is more countries picking up adoption in terms of crypto regulation, clear, transparent rules for everybody to act with, both as a service provider as well as investors and customers. Better convenience, better use cases. And then after that, I mean, the status you were describing is almost our nirvana, like the adoption there, the regulation there. The biggest concern in my mind would be it's going to get boring, because all of us here are there to drive something better, greater, and drastically leapfrogging what's currently there. We're describing we'd always be in a state of steady state, continuous improvement. So then the biggest question is, what's next? What's the next big step, the big jump, the big improvement?
I think for my part, we work a lot with Chainalysis with different regulators around the world, and the number one question is, well, how do I understand this market? Not just from the data that the firms that I'm working with are giving me, but also from the on-chain data. So really helping them understand the picture of the ecosystem and risks within the ecosystem through the data. And I think over time that's going to flow through to the industry in terms of they will be recognizing that that's what regulators are looking for, and that's the sort of benchmark that regulators are setting, that they will come, in fact, already armed. This is no longer a space where you're waiting for the licensees to give you information to understand. They will already be able to understand a lot about your business, a lot about the market through the on-chain information. And so you coming as a licensee, recognizing that the regulators are already, have a fairly strong understanding of you. And that's the kind of the growth we're going to see over the next 5 in terms of the maturity of the regulation of this space, not just having the laws, which has kind of been the struggle up until now and probably up until another 12 months, but the reality of supervision.
Very much. Your outlook, Badr, on crypto landscape
look,
and Binance in particular?
My view is I think you have all the ingredients you need for liftoff. You have the use cases that are clearly there. It's no longer a hype cycle. There is clear adoption of the technology because of the merits of what blockchain can do, makes things more efficient, it's immutable, trustless, permissionless. These are undeniable, and you're starting to see the application of these things. You have regulations coming in a very effective way, setting the foundation layer for institutionals to come in. That's all you need, really. In my view, 5 years from now, I would say we're easily at 20% in terms of adoption. I don't want to put a price on Bitcoin because I'm not allowed to, but I'm pretty bullish on the space for sure.
Every fifth, then. Amar?
Yeah, thank you. I think I'll just echo what Badr said. Like, the pieces are moving together. The puzzle is forming. And yeah, I'm just looking forward to the moment of using apps that are no longer advertised as blockchain or anything else. They're just the right apps to use.
The future looks exciting. Imagine it and be part of it. Thank you very much. A round of applause for our amazing panelists. Photo?
Team photo first.